This is Frontier Opening Bell, and I'm Temple Ashaju. Welcome to our Tuesday edition of the program. We've got Joshua Debisi joining us today in Lagos from Vetiver Capital Management. Joshua, thank you for coming through. Bosin Amofaye, our editor here at Frontier Africa Reports. Gentlemen, thank you for making this show a possibility this morning. Let's tee off with the market as usual. The Nigerian exchange opens the week negative, down 27 basis points on Monday. The BRVM stock exchange was positive, marginally up 0.02%. Egyptian stock exchange was also positive, jumped by more than 2% on Monday, while the Nairobi stock exchange followed suit with some 19 basis points gains. The Johannesburg Stock Exchange was down by 11 basis points, the same direction that the Nigerian exchange closed at. The East African markets now, where quite a number of interesting headlines are coming through for us. We've got Kenya's remittances reaching $315 million, and that's an equivalent of 34 billion Kenyan shillings for the month of May. Storm in KTDA Corp, our CEO, 5 executives are sent home. Kenya Airways is to resume flights to London on June the 26th, this coming Saturday. Kenya tea auction dips to $1.74 $1.74 per kilogram, all the way from $1.81 per kilogram. In Tanzania, they're committing more to boost private sector and foreign. Bosun, we'll hear from you as to how these headlines will make sense for investors today.
Well, investors can be, if you are in Kenya, I think you should be looking forward to the return back to stable environment or flying space for Kenya Airways, which is quite an iconic company listed on the, of course, the Nairobi Stock Exchange, cross-listed across, I think, 1 or 2 exchanges in the East Africa, Tanzania, I think, and Uganda as well. So it's been, the shares were suspended last year, the heat of the entire pandemic and near liquidation or bankruptcy of the Kenya Airways, by the way. So now they're returning. Last week, the announcement was that they're now doing flights to US, increase that to 3 times a week. Now they'll start heading your way in London, Tempo, from today, June the 22nd. So that's some good news. I think the Kenya Airways had also tried to survive last year by rejigging some of its aircraft to become more of a cargo base rather than passenger base. Now the whole passengers are coming through from the US, where 150 million people are reportedly already vaccinated. Kenya has been able to manage its virus issues a little bit. There's still some concerns, natural and as expected, but I think overall Kenya has been able to manage the situation. So for Kenya Airways, that is good news as a company. The tea auction, there's not much difference in the tea price, but again, the farmers would want the best price for their efforts on the farms. Limuru tea, the bigger names can always leverage size to when you go to the tea auction. By the way, then you find the KTDA, which is very interesting because this is a Kenya Tea Development Agency, and there's a storm in their tea cup because it's a tea regulator in the manner of speaking. And then the new board, which was put in place, says they're nullifying the annual general meeting, which was held, I think, about 2-3 months ago or so. So they're sending the CEO and 5 other executives out, which was what happened. They brought police in, according to newspaper reports out of Nairobi yesterday, trying to prevent a breakdown at the headquarters of the company. Now, remember Temple, some few weeks ago, this was a company that's preparing to list on the Nairobi bourse. I'm sure you remember that. Now, if this is beginning to rock the organization, I'm not too sure how soon they'll be able to get their acts together and become a listed company or on the Nairobi bourse. Remittances, I'll allow Joshua to speak to that because sometimes you salivate when you look at your neighbors' FX remittances. People like Joshua sometimes just wish they are the other side. They want getting this steady inflows.
Okay, over to you, Joshua. So anything to say? I'm sure you're jealous.
Yes, that is exactly the case, because we've been talking about how our remittances are struggling. And obviously we know that if we were getting the same level of remittances as the Kenyans, it would be a completely different story with regards to our exchange rate, our black market rate. and things like that. Now, obviously, the whole point is that Kenyans in the diaspora are actively sending back more money than they've ever sent back before. You know, this is record levels of remittances on a month-on-month basis. Something that we, at some point, we're enjoying. Obviously, we know that remittances is a huge part of how we get a lot of our, FX in this country, but not to the same level. Now, we've talked about creating investment opportunities, making it sort of more organized in order to attract bulk money. The problem is the level of trust between the institutions in Nigeria and the people in diaspora has been eroded. The truth is, when you observe the policies that have been put in place, when you observe the environment, the security situation, all these things have turned foreign, people in the diaspora off from the Nigerian economy or the market. So they will just stick to sending whatever it is they were sending to their families on a more personal one-on-one basis, rather than actively investing in the development of the country, which is what we need. Unfortunately, it's not happening.
Well, thank you very much. But it's been a difficult one. I know that one of the reasons why remittances happen is so that one can actually save by way of investments in your originating country, not necessarily where you are. But in recent time, that has not been favorable at all. I can speak for myself because I know that I tried to save through some kind of an informal scheme, and it boomeranged at the end of the day. It's not the best for me. So remittances to Nigeria at this time is just not going to be a positive one for anyone. I can tell you that. I'm sorry for interjecting that much, but let's move on now to look at the Western African headlines, where the Vice President Osinbajo has just met with Manufacturers Association, NASIMA, members of NECA, and other institutions or groups under the OPS. Basically, that's over the AFCFTA. The Central Bank of Nigeria is hunting over 100 accounts of companies suspected of illegal FX deals. NASD OTC is hunting fintech as well for more industrial listing, says the Chief Executive Officer, Ajomale. Emirates suspension of flights in and out of Nigeria is an indefinite one. Gabon records trade surplus of more than 1.7 trillion CFA franc in the year 2020. AEC chief NJ Ayuk is coming to Nigeria soon for AEW 2021. I think we should start with you first, Bosin, to give us a sense of what the AEC meeting or AEW 2021 will be and some of the headlines. Then we'll come back to you, Josh.
Yeah, that's the Africa Energy Week for this year. I had a chance to interview with the NGRU, who was the executive chairman of the Africa Energy Chamber, that's the AEC. And he was speaking from Dakar. He's in West Africa. He's been going around trying to mobilize support for the Africa Energy Week event, which it was just announced. It's going to be in November. After this, the African Oil Week, which was to be in Cape Town, was moved to Dubai. Here, Ayuk was really upset, and surprisingly, Temple within a week period or so is able to mobilize at least up to 7 or close to about 10 energy ministers from 10 African countries. They've been able to mobilize OPEC Secretary General Nigerian Bond Bakindo to back this new Africa Energy Week in November. He's in Dakar, Senegal. He says he's going to be in Nigeria anytime soon within the next couple of weeks to mobilize the Nigerian authorities and the government, the NNPC, Petroleum Resources, oil companies as well. The whole idea here, Temple, was that the offset is that you're moving an African oil conference to Dubai. Let's host this conference here. And that was his point. So why move Africa? Why should Africa's economic, financial, whatever issues be discussed outside the continent? The Asians don't hold any of this conference in London or in Paris or in New York. They hold it between Malaysia, Indonesia, they host it in Japan, Osaka, wherever it is in the Philippines. They don't bring it to any, they don't take it to anywhere else. The Latin Americans, the Brazilians, the rest, they don't take their conferences outside to anywhere unless they're doing a road show. So why take an African oil week that's been done in South Africa, in Cape Town for all these years, just because South Africa has about 35% infestation of virus, while Dubai has maybe a higher figure? Look, so the whole thing was that, look, I was so surprised how much support the Africa Energy Chamber is getting in mobilizing that, look, they're going to do a replacement of Africa Oil Week in the same week in South Africa and host it successfully. And it's getting on like a wildfire. Tempo, as I talk to you almost on a daily basis, I see energy ministers and head of state across Africa supporting the African Energy Chamber that this event is African and it must host on the African continent. If the African Oil Week want to move out of Africa for 2021 to Dubai, so be it. But we will host a similar or the same event on the African continent this year, and we're not going to miss it. That was what that story was all about. Very quickly on the vice president meeting with the organized private sector with MAN, NASIMA, NECA, and the NASMI. You know all this, Temple. You've been a journalist over the years and you reported them. I'm happy that the whole conversation was around AFCFT and what have you. The vice president made what you can call, through the press release we got from the South media people, the same promises we've heard over the years. The government is committed to this, the government is committed to that. Tempo, I didn't read anything new in the press statement. Maybe the vice president, respectfully, His Excellency, said anything that was not captured by his media team. I don't know. I wasn't there. It was a virtual meeting. But that press statement did not offer anything new, did not put anything new on the table. And it's beginning to look like that for most of these press releases, by the way. So, I don't know. Oh, sorry, finally, on the NASD, I spoke with Jomali just yesterday evening, Bola Jomali, who is the annual general meeting, NASD was last week Friday, talk about 2020, the whole technology that they are bringing to bear, update on the NGX shares. And he said there's still a whole lot of backlog of volume of shares to be traded in NGX by the existing shareholders. So the share price down from 25 to 19, thereabout now, because of the orders waiting to get cleared out. So no one should expect the share price to move significantly above the listing price, which it came into the NASD OTC 2 months ago. That's in the month of April also. So that was just it. But looking more at fintech now, to get more these are the fintechs on the OTC, talking to more industrials and industrial manufacturing companies to get on the OTC platform as well. Thank you.
Thank you very much, Boss, and thank you so much for those updates. Let's hear your thoughts, Joshua, perhaps on the NASD OTC and any other choice of headline.
Or the Emirates, if he's deciding to fly out, because they said he can't go via Emirates.
Well, I think that is just a failure of policy and a failure of communication. But specifically talking to the NASD, obviously the fact is that the more companies are traded, are listed on that exchange, the better, obviously, and these Nigerian investors access to these companies. The problem is that most of these fintechs are being courted by, dollars, by money from Silicon Valley and VCs from that area. So they're not really too interested in, trading a small portion of their shares on any exchange in Nigeria, because they can't get the same value. They're not strapped for cash, let's say. And if they were, they would immediately, look for VC funding and go in that direction. If Nigeria's market was more conducive, if it was booming, and we know that heavy money was coming into the market, that wouldn't be the case. Unfortunately, we do have private equity and venture capital firms that are active in Nigeria, but they don't need to go through any of these exchanges. They don't need any of those avenues. They talk to these companies directly, especially when it comes to fintech. The truth is that most of these companies are, small and very, very aggressive, and they are looking to scale and to broaden and to even expand outside of Nigeria. And a lot of them are starting to look towards going to different other countries or other regions, or setting up headquarters outside of Nigeria, just due to the volatility of the, of the Nigerian market, of the Nigerian space. Obviously, we know that Nigeria has a huge market, and if you make it in Nigeria, you can make it anywhere. But the truth is, the biggest barrier to that is from your regulators, your CBN and people of that disposition. So unfortunately, I don't think that any of that is going to come towards fruition, at least not in the near term. Maybe a few shares will be listed here and there, but there won't be a concerted push or a movement towards listing enough shares on the NASD to say that we have a very active fintech space on that exchange. for now, I think. And then on the Emirates story, like I said, the truth is it's just a failure of communication and failure of policy.
So you're bullish that they will come back, they'll renew or resuscitate that agreement, right?
It's just a matter of dialogue. As long as you sit down and you hash out any issues that are, underlying. Obviously, they had the issue with people bringing falsified COVID results and things like that. And obviously, for the safety and protection of their people, you can't expect them to just let everybody in. You come in with a fake test and you say, and then they find out that you actually have COVID. Then, it's a matter of trust. And unfortunately, we have not vaccinated enough people to get to the point where we say, okay, that's less of an issue at the moment. So it's only a matter of dialogue, sitting down with them and finding out what exactly it will take for them to come back. And they have to come back. The truth is, the more airlines that are flying in and out of Nigeria, the better for us. We can't just say, oh, they don't want to do it, it's their loss. We are the ones who are losing, not them.
Thank you very much, Joshua. Let's move on to the Southern African markets headlines. And we have Africa needing over $30 billion for virus economic recovery, says President Cyril Ramaphosa of South Africa. Prosus full year 2021 earnings, revenue up by 34% and trading profits around 50%, all the way to $5.6 billion. CBZ first quarter earnings out, profit after tax rises by 56% to over 1.65 billion Zimbabwean dollars. SeedCo resumes trading on ZSE after botched mergers and acquisition with SCIL. Namibia private sector credit up by 3.1% in April versus 2.0% in the month of March, a 1.1% margin. Bosun, first your thoughts on the CBZ earnings, perhaps, because that looks like a road to getting listed on the Zimbabwean Stock Exchange eventually.
Yes, the commercial bank. The commercial bank of Zimbabwe first quarter. I think the banks like Sergio Mali said yesterday, the financial services and the banks seem to have a way of getting around problems and coming out looking shining at all times. The industrial manufacturers and others always seem to get the stick end of the carrot. So whichever way you spin it, look at how the banks and others survived the global financial crisis of 2008, 2009, how the Nigerian banks survived the Lamido Sanusi's cleansing of 2009, 2010. So the CBS first quarter, that's a good number. It also plays to the fact that Zimbabwe is getting a couple of things right now, and funds are flowing into the country in a manner of speaking from investors who believe that yes, a whole lot of things are getting right. Power is a lot more stable in Zimbabwe. Industrial manufacturing sector. If you look at Zimbabwe industrial sector on the industrial index on the ZSE. You understand what I'm saying? It's jumping like someone on an Olympic trail. It's just like that. So the industrial base in Zimbabwe, as I told everyone, keep your eye on Zimbabwe. Keep one permanent eye on Zimbabwe. I told some CEOs of an asset management firm a few days ago, last week, keep your eye on Zimbabwe because you'll be surprised how things are playing out in that particular location. SeedCo is back after that botched attempt to buy SCIL. The central bank says no, so trading resumes. Go hunting once again, see who you can get. Prosus full year revenue about 36%. That's a good news. The CEO was on Bloomberg early yesterday morning at about 9 a.m. Nigerian time or so, and he was speaking about the relationship, the executive pay, how they divested throughout the spun off from NASPAS in South Africa, went to list on the Luxembourg on the Amsterdam Stock Exchange and what have you. So it's a whole stories out there, but it shows it's still a good they're in good business. Let me allow Joshua to speak to this $30 billion thing because the virus thing. Are you speaking about the Emirates where others flying in? So you see, if you're not in the skies and your skies are not, you see, you're the one who is losing. There is no two way about it.
Sure. Oh, sure. Yeah, Josh. President Ramapohosa says we need more than $30 billion for virus economic recovery. United Nations says it's more than that, $400 billion. How much do we really need?
Well, the truth is, I think they can both be correct in a manner of speaking, simply because President Ramaphosa is talking from the African perspective. I think 30 billion is a far more realistic figure than 400 billion. No, there's no institution, not the IMF, not the World Bank, is going to dip into their pockets and bring out $400 billion and pour into the African economy for various reasons. Now, 30 billion, it can go a long way. And if you look at it from a budget perspective, I mean, how much of South Africa's budget is that? How much of Tanzania's budget or Zimbabwe's budget is that? How much of Nigeria's budget is that? You know, the point is that there is a lot we can do with a lot less. Obviously, there are budget shortfalls, there are infrastructure shortfalls that need hundreds of billions of dollars on the African continent to fix. But I don't think that we as a continent are even in any position to absorb that kind of funding right now. The truth is, if we brought it in, there will be a lot of mass proliferation, I believe, and not that much would get done. And it would just, you know, the market would just be awash with dollars. And I don't think that the international market is really looking for that. But 30 billion is far more realistic. Now, how it's going to be spread, how it would be spread out is another question entirely. Obviously, you know, the bigger markets, the bigger economies, your South Africas, your Kenyas, your Zimbabwe's and your Nigeria's and your Egypt's would, you know, absorb a large part of that funding. But what exactly would it go to address? What shortfalls is it going to plug? In South Africa, I think that those would be a lot simpler, hopefully, to address. But in other countries like Nigeria, I'm not entirely sure, because we've obviously been sourcing for dollars for quite a while. And I unfortunately believe that it will just get poured into, you know, long-term infrastructure projects as usual.
Sorry, let me just come in and ask this. You know, in recent time, a lot of the metals that Africa has in large deposits has actually risen in value. Gold, copper, which is massively produced in DRC and of course in Zambia. Yes, I mean gold in Ghana. Nigeria is also doing more of gold, even though we know that that is not officially well accounted for. Don't you think this is enough for us to also ramp up somewhat support for our prosperity, rather than having to borrow again from all of these multilateral agencies?
Absolutely. I completely agree with you. If you look at, let's just take the Nigerian case, for example. You know, you talked about precious metals there, but what about steel? The truth is, you know, across the entire value chain of precious metals, of mining, of all these things, we are completely underperforming. I don't think we're doing up to 5% of our true potential. Now, unfortunately, due to the cumbersome nature of government, of big government, of trying, you know, putting their hands in too many pots, it's a bit difficult to focus on these things that will add value. Now, you say, okay, the best thing to do is to bring in the private sector to maximize efficiency and to ramp up production. I believe that that would be the way to go with regards to, like you said, gold, silver, copper. I mean, copper especially. The truth is that we should not only be mining, but we should be refining these products and selling them on the international market. Now, you would hear, you know, these fringe stories about some foreigners coming into the market and doing one or two nefarious things because they are extracting value from the land. But unfortunately, those things are not being well, you know, monitored, and so we are losing a lot of value. And you are absolutely right that if we were to, imagine if, you know, we had a fully functioning steel mining and refining infrastructure, same with gold, same with copper, same with silver, we wouldn't be in this position. Just to talk about, you know, natural resources, but we can't make the same mistake we made with oil, which is where we just pull it out of the ground and sell it in its raw form, rather than refining it and selling it and deriving even more value from it that way. But unfortunately, that again would cost us money to get up and running, unless we bring in private investors at the very beginning, so that we don't need to borrow any money. We just tell them, take your licenses, you know, do your mining and pay us, finish.
Right, thank you very much. Since we're running out of time, let's move on to the Northern African markets and look at NBE loan portfolio up by 62 billion pounds to 776 billion Egyptian pounds in 2 months. Raya Holdings has got dividends of less than 1 cent per share to be paid for the full year ended March 2021. Morocco's Credit Agricole Group launches first OPCIE, and in Tunisia, the financial bids for Carthage Cement opens today. Tunisia's Sotomayor posts 6 million dinars net loss in 2020 financial year. Bosun, your thoughts?
Yeah, I think the Carthage cement story is quite interesting. The financial bids open today in Morocco. Let's see how that goes. Cement, phosphate fertilizer, and what have you. It's all part of the business between Egypt, Morocco, Tunisia, and a few other economies up north of the continent. The story for the Raya Holdings financial year, I think some of these stories are just coming through for the full year, a whole lot of first quarter 2021. Morocco's Credit Agricole launching the first OPCI within the market. This is one big banking institution within the North African market. Then Sotomayor, which is the delivery package logistics company, like a post office, kind of like a mail organization, also reporting. I think a couple of these stories are coming through because we're in that season already. For some other jurisdictions, your second quarter is almost prepared. Today is the 22nd, so everyone should just start getting ready for most of these numbers coming through. But like I said, when you look at the National Bank of Egypt and its portfolio, massively, but Joshua is the banking analyst at Vetiver Capital. He knows how the numbers play up. The banks, as I said earlier, a few minutes ago, they have a way of coming back with jumbo numbers. How they make it, but again, if you're in charge of everybody's money, then you should be making money.
Agreed. Joshua?
No, I agree. Definitely. The truth is that the way banks do accounting is very different from normal companies, because companies sell products and record sales and cost of sales and things like that. Banks, they just mark to market. So as long as your holdings or your securities and your loans are giving you a specific percentage, you should be okay.
Added to that is the fact that with these consumer goods and industrials, you can't compel anybody to pay for what you're selling, or you can't compel them to buy what you're selling. But with the banks, if you take a loan, oh my God, the way the banks went to the house of one of the senators yesterday and they were raising their placards, that's what you get to have. Anyway, thank you, gentlemen, for gracing this show again this morning. Joshua Debisi from Vetiver Capital Management in Lagos. I appreciate your presence and your analysis. Bosun Amofaye, thank you very much for your analysis and your editorials as well. Thanks a great deal, gentlemen. This has been the show for today. I'm Temple Ashaju. We'll see you next time. Bye for now.